Well, the bond vigilantes, they are back. Big investors bidding up bond yields to pressure governments to spend less and head off inflation. Now, you can also see their footprints in rising three-month LIBOR rates, which are the rates banks pay for three-month loans priced in dollars, a real indication of how much banks are willing to lend to one another. And in the push for fiscal discipline among European Union members included in the $1 trillion rescue plan for Greece and other faltering economies. But you don't see their influence reflected yet in U.S. Treasury market, where the 10-year yield is near its lowest level for the year. Joining us right now to talk about this paradox and his outlook for the global bond and stock markets is Ed Yardeni. 27 years ago, he coined the term bond vigilantes. 3 months ago, he told us that the bond vigilantes were reemerging to instill fiscal discipline in Greece and other European countries. So great to have you back.
Thank you.
So they're working overseas,
yes,
but not here in the U.S. yet.
That's correct. Actually, because they are working so hard overseas, there's a flight to quality, which has benefited the dollar and benefited U.S. Treasury bonds. We've seen great inflows into the Treasury market, as we saw in the latest Treasury International Capital data.
Right, huge.
Huge, yeah, absolutely.
Can you expect the overseas work to keep the bond vigilantes at bay here in the U.S.? I mean,
I think they had so much work overseas that maybe there aren't enough of them to work the streets here. But this is a wake-up call. It's a warning. I mean, let's not pretend that we aren't at risk down the road if we keep up moving in that same direction.
And let's ask about, though, in terms of Europe, I mean, do you feel like folks are listening? They get it? They see what the bond vigilantes are saying?
I don't know. I think we've got this clash of the titans between governments on the one side and markets on the other side, and I'm not sure that the policymakers over there actually get it. They're fighting the markets. They're blaming the markets for all their problems, where the markets are just reacting to the problems that the governments have created.
Hence the ban on naked short selling by Merkel. It doesn't make any sense.
You know, everybody's looking at it as kind of a desperation measure. It just doesn't have a lot of credibility. It just came out of nowhere. It was done unilaterally. The French hate it. They said, why didn't they talk to us first? And
which is a good question.
Well, a couple of weeks. There's no leadership in Germany and in Europe generally on these issues. They're all kind of running around, not doing anything particularly smart. Even this Euro Tarp is turning out to be not such a great idea after all.
Do you see that actually going through? Because clearly Merkel is going to have a problem pushing it through in Germany, one of the most important countries for that so-called trillion-dollar loan package. And B, what should they be doing? What is the right
even the
thing?
U.S. Tarp was no great success. I mean, remember, first it was supposed to deal with toxic assets, and then a couple of weeks later it says, never mind, that's not going to work. So let's just inject capital into the banks. And then everybody said, my God, are the banks in that much trouble? And now with the Euro Tarp, all you're doing is issuing more debt to bail out debtors. So what's the point there exactly?
It's kind of a vicious cycle, isn't it?
It's a vicious cycle. And you know what? They should have let the Greeks default. I mean, if the Greeks, made all these mistakes and spent beyond their means and they couldn't afford to make the payments, just let them default. I don't know that would have destroyed the euro. Quite the opposite. I think it was injected some confidence that they really are sticking to their treaty.
Right.
Well, we've heard a lot of people say that everybody's got to take his lumps in this kind of situation, including the debt holders, right? Yeah,
exactly. I mean, the bond vigilantes actually have been, I coined the phrase, but they haven't been as vigilant as they should have been. They kind of fell asleep at the switch. I mean, why did they buy all those Greek bonds?
Right.
They obviously didn't do their homework, and then all of a sudden they're shocked. But if you go over there and ask people about what kind of benefits they have and perks and vacation time, it's like, do you really want to finance that?
Right, exactly. So when do you think, though, that the bond vigilantes get to work here in the United States? I mean, or how soon should they be? Do we need them to be?
Well, it's very interesting because, you go over to Europe and the bond vigilantes are trying to reestablish law and order and reestablish fiscal and monetary discipline. You come to the United States, and actually it might be the citizenry, it might be the votes that occur in November that create a regime change.
You're seeing that a little bit in the primaries already.
We talked about it last time. I used the word regime change because I think that's what's happening, and you're seeing it in the primaries. Incumbents on both sides are getting thrown out. We don't have term limits. Let's just vote them all out and see if the next crowd can get it right. So I think the bond markets are actually, the vigilantes are saying maybe there's a chance that we will reimpose fiscal discipline in the United States.
Can I ask you? I got to ask you, your stock market, you still think it's 1350 by the middle of the year? I mean, that's like a 20% move up. Do you really still hold that?
It looked pretty good, at the end of April. But, I guess maybe in retrospect, go away and may has some validity to it.
Okay.
I think there's still upside in the market, but I think the summer is going to be a washout.
All right, we're going to leave it there. Hey, Ed, thank you so much. Ed Yardeni of Yardeni Research.